All right, welcome back to Fast Money. Stocks up, Bitcoin up, stocks down, Bitcoin down. Has Bitcoin become a greed gauge or a market gauge? Maybe so. Let's go down to the New York Stock Exchange, where apparently a party has broken out. Bob Pisani, is the party for you?
They were no. There's a party every day down here, and if they were just playing the Cheers theme from the 80s here, the 80s never died down here. Hey, is Bitcoin and the S&P 500 correlated? Well, it might seem that way if you look at what's happened in the last week or so. So Bitcoin has dived as the S&P has dived, as Brian mentioned, bounced on Tuesday just as the market has bounced. Looks like there's some relationship, but the longer-term correlation is really much weaker. I mean, obviously, Bitcoin was up 1,300% last year. The S&P was up perhaps 25%. Right now, Bitcoin and other large-cap cryptos have a very low correlation with the S&P 500. But as the number of people trading cryptocurrencies increases, it's possible the correlation could go up. The majority of crypto trading is done by retail. We know that. Now we have a massive sell-off in the crypto market. So the question is, what percentage of the crypto market is also investing in stocks? And did the sell-off in crypto cause anyone to sell their stock holdings? I tend to think that this is fairly small, that this gets into a separate question of causation versus correlation. I think that's also fairly small. But remember, it used to be argued that cryptocurrencies were uncorrelated assets. So if a correlation became stronger, it may not necessarily be welcomed by everyone. Now, that said, it's possible it worked in the other direction this week, by the way. The S&P 500 impacted Bitcoin and cryptos. The 5% drop in the S&P Monday was a very sudden event. Its suddenness and the steepness of the plunge may have caused some fear in selling in markets generally, perhaps even including crypto. So maybe there's a little bit of a narrative there. Back to you, Brian.
Bob Pisani, if I was there, I would throw a party for you, my friend. Thank you very much. Okay, let's trade this. Correlation is not causation. Let's say it all together. Does Bitcoin...
Correlation is not causation.
Thank you very much.
Then
I want to see you after class.
So. Did you guys need to reinforce that by speaking?
He said, let's say it together.
Aaron and I stayed quiet. So, anyway. What's up?
I keep raising the chair up. Guy Adami, do you think that Bitcoin is in any way related to the equity markets?
Personally, I don't. But history will say, the small history Bitcoin has suggests that maybe there is something to it. I've said all along that if you want to trade equities on the back of this, the best way to go is CME. But as our guest will tell you, maybe there is some causation
I think there definitely is. I think the migration of you have a changing base. You have a changing base of Bitcoin owners now. And if I look at something much more narrow than Bob's chart, looking November 30, Bitcoin really started to go berserk in December, and the S&P and the Bitcoin from then are almost within 1% of each other. And when you get really, really volatile markets like we've had in the last few days, everything correlates. I think no question.
But how about better defining it and say it's at the extreme point is when Bitcoin really defined that. So in other words, you talk about November made its run from mid-November and started losing it, whatever we want to call that, in mid-January. That was defining the blow-off top of this market, and that's why it did.
But hold on, guys. Let's bring in our guest, because your next guest called the correlation between cryptos and the market on this very show. Listen.
I think it just becomes finance 101. What you have is a risk-on situation, and today we had a risk-off situation. The risk-on situation is equities are higher, crypto was higher, high yield was tighter. Today, what do we have? We had crypto sell-off, we had the equity market reverse, and we had high yield widen out. To us, it's really that simple.
There you go. So let's bring in that guy. Chris Harvey is the head of equity strategy at Wells Fargo Securities. Seemed like a good call. I assume you still believe that to be the case.
We still believe there's a correlation.
So what does that tell us then about the future direction of either?
Well, we don't look at the direction. We look at it as a risk. And what we think is maybe on Monday what we saw is all risk products sell off. And what it does is sometimes it adds fuel to the fire. So we think about it more as what we have to watch out for, what we have to cauterize, what we have to tell our clients to be careful of. We don't really look at whether it's going to go, we don't make a call whether it's going to go up or down, but that it's a risk in the marketplace, and it's really far out on the risk spectrum, and as risk gets sold, it just adds fuel to the fire, and that's the concern.
Yeah, I mean, I think, Chris, the question now is, do you think the next move higher in Bitcoin is going to be leading the market? Because this is where we're trying to go with this discussion.
So what we do is we bring everything back to equity. So today we raise our price target. We think equities are going to be up 10%. If we're right, what we should see is risk product going higher.
From here, I'm sorry to interrupt you. 10% from here, we're going 10% higher this year.
This year, next 3 to 6 months. So we're rather below. What we looked at is it's all about earnings. Earnings season has been fantastic. Guidance has been really good. When you layer aggressive fiscal policy on top of aggressive monetary policy, it works, and it's working. And so we continue to see EPS numbers go higher. Valuation is looking better because prices come down. So overall, we think it's a very good, the next 3 to 6 months are going to be a very good period. So what we're trying to say with regard to the cryptocurrencies is if we're right, and risk starts to be bid again, you should start to see a bid. It wouldn't surprise us to see a bid in some of the crypto markets.
You got to be a little surprised about the way things have gone down in the equity markets, because we had the least volatile year ever last year. I mean, literally the least volatile. Yeah. I feel like we're driving down the road, we hit a piece of ice, right, and the car's kind of swerving and whatever, and now, so you're saying we're just going to get right back on the road and go straight. But how do we know that?
So last year was an anomaly. The VIX was shot and run over and shot and run over. What we saw, and what Pete and everyone else was saying is, earlier this year, what did you see? Stocks up, vol up. What did that say to me? That said that there was more risk in the marketplace. Now what you had last year is you had money chasing performance. I'm going to sell vol, sell vol, sell vol, sell vol, and it works. So you have weaker in hands, and more aggressive people. When vol starts to tick up, then you pay the piper. And that's what we saw. We saw a massive demand for liquidity. We called around, I talked to all our desks, our cash desks, equity cash desks, our derivatives desks, our convert desk. What we saw outside of the derivative market was everyone was saying orderly, orderly, orderly. When you talk to the derivative market, it was not orderly.
What are they asking about Bitcoin
below 8,000.
What are the institutions saying about Bitcoin today? What are they saying tomorrow?
They just want to know. They want to know more about what's going on. They want to know about the volatility. They want to know about the correlation. They want to know about the risk. People don't really understand what's happening in that market. It's a growing market, or it has been a growing market, and they're not sure if, at this point, how much they should pay attention to it, and whether it's going to be a systematic risk. I don't think it's a systematic risk, but it is a risk.
When you talk about risk on, risk off, gold doesn't serve its purpose. Is it now being
gold? I know nothing about other than it's shiny and malleable.
Because of the argument that Bitcoin should be worth some percentage of gold. Gold hasn't. In inflation and volatility, it's not working.
Of all the things in the marketplace, gold is the only thing I can't talk about. Gold is the only thing I never had.
Karen, I love your point, though, because gold hasn't moved up. Apparently, there's all this fear and terror in the market, but no one's been buying any gold.
Couldn't you say it like this, Chris? How about the fact that the correlation between the idea that people have been trying to diversify their portfolios in some way or another? Bitcoin, as we've all talked about on this desk, you don't want it to be 50% of your portfolio, probably, but maybe 3 or 5%. And as that continues to grow, that in turn puts Bitcoin that much closer to moving with the correlation of the market itself.
And something else we said, when people ask us, is there a lot of speculation in the equity market? We said, no, there's not a lot of speculation. However, we saw a lot of speculation in the cryptocurrency market. If you want to speculate, that's where you went. Now, as it gets more regulation, you should expect to see some of that speculation come out, more liquidity, a little less volatility, but it's still very far out on the risk spectrum.
Yeah, Bitcoin, by the way, we got it on the price chart there. You can see it's moved.
That's what we do here.
Yeah, it's above 7,855.
We tend to put the price up there, Chris.